Stocks suffer the biggest drop in months. Will earnings season end? The stock market slide? In today's cover story, watchdogs are fired up in the aftermath of a massive hack attack at JP Morgan Chase. Plus, why one analyst says millennials have a financial crisis hangover. And inside the lab that's pushing smartphones to the breaking point. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Wednesday, October 8th, and today's First Look earnings on tap. Corporate America begins revealing profit results for Q3, led by Alcoa tonight. Yum Brands, a parent company of KFC and Taco Bell, turns in a miss on earnings and revenue. For now, the economy rules. Traders sold stocks like crazy on Tuesday. The Dow took a steep drop of 273 points. The Nasdaq plunged 70. And the S&P 30, gold bounced $2 and oil fell to $88.43 per barrel. The major market move followed an IMF report warning of slowing growth in the Eurozone, although the U.S. was given a stronger growth forecast than expected. And oddly enough, on the very down day on Wall Street, America's own Coca-Cola rallied to an all-time high. Well, this could also be a market mover today. JCPenney's CEO Mike Allman has a meetup with analysts. Analysts and shareholders want an update on the retailer's turnaround mission, and Yahoo is cutting 400 jobs in India. Trader Larry Tover of SFG Alternatives joins us now. And Larry, the bears have got a strong grip on this market. What are we in for today?
Well, we have the Fed meeting today, and I think yesterday it was just like a lot of knee-jerk downdrafts. The market just lost all buyers.
All right, oil had a big finish, ending below $90 per barrel.
Yeah.
What's your target on oil?
Well, I do think oil will continue to trend a little bit lower if we continue to get dollar strength, which I think we will till year end. I think the market's underappreciating how much the strength of the dollar is affecting the downdraft in oil.
With Treasuries, yields are getting so low. I'm hearing calls out there for 2.2%. What's your projection?
Yeah, I still think they're going to rally from here. Yesterday, they hit a 52-week low, I think 233. I do believe at the end of the year, we're going to see 275. I think a lot of these disinflation fears are way overdone, and we'll start seeing the yield curve steepen again.
Should investors be worried about the market today?
No, I don't think so. I mean, keep in mind, we've had a lot of false rallies. We've had a lot of knee-jerk reactions. The healthiest thing that could happen to the S&P 500 is to consolidate between that 1950 to 1985 area. And it's had trouble doing that as of late, but we need to do that until we get through the third quarter earnings season.
So, too, the last thing you want is a straight arrow going up. Good to have you here,
right.
Larry. Thank you.
Thank you.
Chuck Hopla joins me now. Good morning, Chuck.
Good morning, Angie. The earnings extravaganza kicks off this week, but it's next week that investors are really waiting for. That's when Wells Fargo, Citigroup, and JP Morgan release quarterly results. This week, New York's comptroller Thomas DiNapoli gave investors a preview of what to expect. DiNapoli says in the first half of 2014, Wall Street profits fell 13% due to hefty legal settlements. He notes that the street remains very profitable, but that earnings may be constrained this year as the industry pays a price for its bad behavior dating back to the financial crisis.
A shakeup on Wall Street could be coming. The New York Times reports traders at several banks could face charges. According to the Times, government investigators are snooping around a dozen or so banks, including JP Morgan Chase and Citigroup. It's linked to allegations that traders working for the financial firms manipulated currency exchanges and benchmark interest rates for personal profit. It's reported Attorney General Eric Holder, who is stepping down, is leading the charge on Wall Street.
In today's cover story, the Attorney General for the state of Illinois is more than irritated at JP Morgan Chase's response to a hack attack of personal information from 83 million American households and small businesses. The AG, Lisa Madigan, is calling for a comprehensive response from the highest level of government. And she's hardly the only one criticizing the bank for its handling of the hack attack thus far. JP Morgan Chase customers do not think their bank has been forthcoming about a hack attack in which personal information on millions of Americans and small businesses was stolen.
I don't know what they're doing, but it's scary what they're allowing to be done.
They have all our email addresses, and they haven't reached out to any. They haven't reached out to myself.
Publicly, Chase has said it will not notify individual customers whose compromised information was limited to names, addresses, phone numbers, and emails. No evidence of bank numbers or passwords. But Illinois Attorney General Lisa Madigan says Chase is trying to diminish the extent of the breach. Chase would be wise to rethink its decision. Chase customers deserve to hear what happened from their bank instead of having to rely on media reports and searching for it on a website. But not everyone is critical of Chase at this point.
I think the best policy would be to take it at face value. I don't think it serves the bank's interest to be dishonest, because if they were to come out later and say, hey, it was far more information, then I think it would only serve to tarnish their image.
The thieves are believed to be from Eastern Europe or Russia. While the bank says it has not yet seen unusual fraud activity, customers are being warned that scammers may soon try to trick them into divulging information that the bank has already.
What I anticipate will happen, which happened in the past, they start sending out a stream of emails saying, your account's been locked, we need your PIN number, we need your account number, your mother's maiden name, your social security number to reactivate it. Consumers look at the email, they kind of believe it, looking like it's coming from Chase, but it's not coming from Chase.
Two other incidents of computer hacking. MBIA, the nation's largest bond insurer, says it's notifying customers after a web server inadvertently exposed account numbers, balances, along with usernames and passwords online. The problem has since been corrected. And AT&T says that an unauthorized employee gained access to Social Security numbers and other data from about 1,600 customers in August. The employee has since left the company.
Walmart will no longer provide health insurance for some of its workers. The world's largest retailer says it can no longer afford to provide health coverage for employees who work less than 30 hours per week. Coverage will be discontinued as of January 1st. And as a way to provide health insurance for employees in Los Angeles, some restaurants are tacking a 3% surcharge onto bills, according to the LA Times.
In another sign of a recovering economy, sales this Christmas are expected to jump more than 4%. That's the highest in 3 years. The National Retail Federation predicts sales will reach $616 billion, an uptick of 4.1%, topping 2013's increase of 3.1%. Despite the optimism, the Retail Federation also says consumers will be on the hunt for steep discounts. Trey Boge of RetailMeNot.com has tips for retailers hoping to lure spending in their store.
Incentivize the consumer to come in and shop with you, and then offer them a great product mix, offer them fantastic customer service, free shipping, other things that consumers really enjoy. And that's how you have a successful shopping season as a retailer.
Retail Me Not finds almost 50% of consumers are starting their holiday shopping before November this year. Holiday sales generally make up about a fifth of total retail sales for the year.
Americans may have more jingle in their pockets this Christmas by spending less to heat their homes. The Department of Energy forecasts temperatures will be milder during the winter months. If the forecast holds true, people heating their homes with natural gas will find their bills will be lower by $767. That's compared to the recent wicked winter when bills soared as Americans struggled to stay warm.
U.S. employers want to hire 4.84 million people. That's the highest number of job openings since January of 2001, according to the Labor Department. Compared to a year ago, job openings are up 23%. There are 9.5 million unemployed people. That means for every open position, there are about 2 job seekers.
McDonald's Japan is out with a surprise warning. The restaurant chain says for the first time in 11 years, it will turn in a loss for the year rather than a profit. The chain is losing money due to lost sales and higher expenses connected to the Chinese chicken supplier scandal. The meat supplier is accused of intentionally selling expired meat to restaurants in Asia this past summer. It prompted McDonald's to stop sales of all chicken products made in China. The CEO of McDonald's Japan says it had an immediate and significant impact on business.
A staggering amount of women employed in the restaurant industry say they are sexually harassed at work. A report by the Restaurant Opportunity Center claims 90% of women in the service industry report sexual harassment at work. The group says it's a problem for women who rely on tips from customers. Workers who make tips earn a sub-minimum wage of $2.13 an hour versus the federal minimum of $7.25. The National Restaurant Association slammed the report for being, quote, organized and funded by national labor unions and their allies.
Amazon is being questioned about its tax practices in the Eurozone. Officials of the European Union are growing suspicious about whether the online retailer is understating taxes it owes by recording its taxes in Luxembourg. Amazon says it's subject to the same tax laws as other companies operating in Luxembourg. Apple and Starbucks and the financial arm of Fiat also face EU investigations.
Chrysler and Fiat can now officially become one publicly traded company. Fiat said no objections to the merger were filed by creditors before the October 4th deadline. So starting Monday, the newly merged automobile company will trade on the New York Stock Exchange under ticker FCA.
The latest car innovations could be making driving more dangerous. Two new studies say that voice-activated capabilities distract drivers at dangerous levels. Being able to send a text message or make a call while keeping hands on the wheel actually forces drivers to concentrate on the task more and not less, according to both AAA and the University of Utah. The worst system was Apple's Siri. It tested at a distraction level of 4.14 on a 5-point scale. At the other end of the spectrum, Toyota's InTune with a distraction level of 1.7. Here's the economic calendar for today. It's the MBA Mortgage Index, crude inventories, and FOMC minutes. On the earnings calendar, Big Alcoa, Monsanto, Ruby Tuesday, and Costco. Still to come, a smash hit from inside Motorola's testing lab. Plus, get over it. Why one investment advisor says millennials need to stop fearing the stock market. And is college plus credit a recipe for debt disaster? Find out. Tuition on a credit card comes at a price. According to financing agency Sallie Mae, 3% of parents and 3% of students pull out the plastic to cover some of the tuition bill. Matt Schulz, a senior analyst at creditcards.com, warns there are convenience fees attached that add up to $262 for every $10,000 charged.
Paying with a credit card only really is smart in certain situations where you have low tuition that you can maybe pay off after a couple of months and where there's no convenience fee. Otherwise, it just doesn't work very well for you.
Despite the fee, Scholl says paying for college by credit could become more of a trend. Bill Mahler is here with tips on how young Americans can make money.
The Depression babies, they were called, the great generation after the market crash of 1929 that never again would put their money into stocks or into a bank. Well, today we've got the recession babies who, because of our recession, are afraid to invest in stocks. And you know who has the greatest aversion to equities? Millennials. Investment manager Patrick O'Shaughnessy, he thinks this is such a mistake. He's written a book about it. It's called Millennial Money, How Young Investors Can Build a Fortune. You know, absolutely, Patrick. These are the people who can take the greatest advantage of that beautiful thing called compound interest.
Yeah, this is the great paradox in investing, is that the time that it matters most to be thinking about it is when you're young, when each of your dollars has the most potential. If you think about the long-term history of the stock market, the average potential of every dollar, if you started investing when you're about 25 years old, is that dollar growing to about $17. That's a huge return. Most people wait until they're about 40, when retirement is actually on the horizon. They can start thinking about it to invest. The problem is a typical result there will be $1 turning into about $5. Wow. So a huge amount of return foregone by waiting.
Even people who understand this, though, not millennials only, are still harboring some measure of aversion to it, too. How do you get young people off the dime and get them focused on this missed opportunity?
So millennials have it right. They're right to be conservative and worried about their future. Where they've got it wrong is in thinking that stocks in the global stock market is an extremely risky place.
They've seen people burned, in fact.
Of course, twice, right? So you're very much imprinted by the environment in which you grow up. We've had, my generation, 2000, 2008, two huge 40% crashes in the overall market, often bringing financial ruin to some of the people that we love. And so we view stocks as inherently risky. Now, you can't view risk as just a black and white concept. If you do it that way, yes, in the short term, stocks are very risky. But we're young, we're 25, 30 years old. We've got up to 40 years until retirement. Over that long time period, stocks have always been the safest investment of all of our options out there.
Sounds like parents should be talking to their kids about that, because I think most kids are of a mind of spend, spend, spend.
There's no doubt about it. It's a crime that it's not taught in high school and college. I took 8 years of French and didn't take 1 hour worth of learning about money and investing. So parents is a great place to start by just basic lessons for their kids.
Patrick O'Shaughnessy, the book again is Millennial Money. Thanks so much.
Thanks very much, Bill.
Coming up, Costco gets the car rolling on earnings. Is now the time to bulk up on the stock and handle with care? Forget about it. Motorola gets reckless with smartphones after the break.
Apple takes a big bite out of rival Samsung. The South Korean electronics giant is about to report a staggering 60% decline in third quarter profits. Revenue will take a corresponding hit, expected to be down 20% from a year earlier. Analysts had expected a profit of $5.2 billion. Apple continues to eat away at Samsung's market share at the high end, while Chinese competitors are challenging Samsung in the lower end of the smartphone market.
Tech companies go to extremes with smartphone stress tests. Long before reaching store shelves, phones are dropped, dunked, and repeatedly smashed. This Crane Chicago report goes inside Motorola's phone testing lab.
We're making really complex computers for your pocket, and they're getting smaller every day, and we're putting in a lot more capability in these devices. At the end of the day, these things are made to be used. The conditions can range from different temperature range to a lot of situations where you drop them on the floor. But most importantly, what we want, our objective is for people to use these devices as much as they need to be productive in their lives. We have extensive amount of testing that we do in our devices, and then at the end we take our prototypes into mass manufacturing phase.
So when you drop a phone on the floor, you're imposing a load on it, and this force field actually travels through the phone and applies these loads to the different components. When you drop a phone, the G levels are 20,000 G, because the G level it's seeing for an instant of a time, okay, it's less than a microsecond, the G level may be 20,000 times. Because it's very possible right on the hit, it's okay, and just at the end of the hit, the stress field hits it and causes it to break. We know when a part is going to fail because we know at what stress it's going to give up. And to us, a failure could be a simple thing like it's bent, it could be dented, or it actually breaks like a glass breaks. We need to understand and we need to know it upfront in the design.
And so if you think about the technology, if you think about the reliability, if you think about manufacturing challenges, and then you add choice on top of it, from an engineer standpoint, it is a really difficult problem to solve, but you know, we take that challenge on every day and we solve it, and it's really great.
We want to thank Crane's John Pletz for that report. A study by Square Trade, which sells extended protection plans on smartphones, found the new iPhone 6 and iPhone 6 Plus proved to be more durable than other phones in its category. That was a plus for the iPhones until consumers complained their phones were bending. Tech analyst Rob Enderle joins us now with his thoughts.
Most of the phone companies actually have been using a composite material, either steel or a composite of metals, to create a very stiff, a very hard frame. The composite uses magnesium, and the end result is their phones don't bend, and they're designed not to bend. Apple made a mistake by using aluminum throughout the phone for what is a very large phone. And of course, aluminum is very soft if you've ever bent it, and so it was completely inappropriate for a phone like this. And it was kind of a way to conserve cash for them. But you know, when you're buying a phone that costs upwards of $900 without subsidy, you don't want something that's cheap. And getting the sense that your phone's made out of aluminum foil probably doesn't do them any good. And Motorola and Samsung both are driving this thing pretty hard, showcasing that their phones are built well.
Thank you for your insights as always, Rob. Still ahead, find out why Costco tends to be a loser on earnings. Chart Talk is next. Is underway. James Romali of KeenOnTheMarket.com joins us now for a closer look at Costco, which reports results. Good morning, James.
Good morning.
Would you be a buyer of this stock? What's the chart look like?
Well, I actually want to wait for the number here for two reasons. One, the chart is actually looking pretty strong here. The stock is less than 2% off of its 52-week highs, as the broader market has been getting absolutely crushed over the past 2 weeks. Now, I like Costco because there does seem to be a little bit of an underlying bid in the shares. However, on earnings day, it can tend to be a little weak. It's sold off 5 of the past 8 quarters, but the stock doesn't move very much on earnings day. They're only implying around a $3 move from that 125 level between this morning and Friday's expiration. So if the stock were to sell off here, I might actually use that as an opportunity to get long a little bit lower.
How critical will Costco's earnings results be to traders as they're trying to get hints as to what's going on with the consumers?
Right, so in terms of getting a picture of what's happening with the consumer and the broader economy, Costco might not be the best bellwether. I would like to see some more discretionary retail names report, maybe like Gap stores next week. I think that'll give us a little bit better idea of where the consumer stands.
You've talked about some oil stocks out there. What's happening?
Right, so extremely volatile moves in oil, in the price of crude oil over the past couple of sessions here. So I'm not really touching these stocks anymore. We're seeing airlines selling off hard, even though the oil seems to be trending lower. So it's a little bit of a tricky space right now.
Yeah, you were a buyer of those airlines not too long ago,
I
James.
was.
Okay, thank you, James.
Thank you.
Hey, those airline stocks could still make a comeback. That's a wrap for now. Coming up tomorrow, Movies and Money as Gone Girl steals the spotlight. From all of us at First Business, have a great Wednesday.